You're listening to AI Prism from Seoul Economic Daily.
Does this week's data change the Korea versus Japan versus China relative weighting in an Asia ex-Japan allocation? And does the Anthropic export control introduce a new risk premium for AI equity? It's Monday, June 15th. Here's why global investors are paying attention to Korea today. If we look at the data, we're seeing a pretty striking pattern emerge right now with Samsung Asset Management's U.S. AI Infrastructure Fund.
Yeah, the growth there is, well, it's significant. They've returned 110% since their launch in June 2025.
Right, 110%. And the fund has grown to 25.5 billion won, which is roughly 18 million USD.
Exactly. And what's interesting is the lead manager is actually calling this current market correction a buying window.
Oh, really? A buying window?
Yeah, I mean, they see it as just a brief financing dip before earnings validate the valuations.
Okay, so compare that domestic hardware confidence with the software data we're seeing out of Japan.
Right. Japan's Ministry of Economy, Trade, and Industry, they just put out their digital deficit estimates, which is basically the net cash they send outward to foreign AI platforms.
And the numbers are huge, right?
Massive.
Yeah.
They estimate the deficit will reach 6.8 trillion yen in 2025.
So that's approximately 46 billion USD.
Yeah. And then by 2035, they expect that deficit to expand to 18 trillion yen.
Wow. Roughly 122 billion USD.
Exactly. It's a heavy structural drain.
So as you build your allocations, is this essentially an analogy where Korea is acting as the picks and shovels hardware provider?
Right. The infrastructure.
While Japan is basically stuck paying super expensive rent to these foreign AI platforms.
That analogy perfectly frames the economics here. I mean, hardware infrastructure is a hard asset capturing immediate capex, whereas software reliance is an ongoing drag on Japan's trade balance.
But wait, if software is the rent, why are we seeing these sudden disruptions with the U.S. regulatory risk layer?
You're talking about the U.S. Bureau of Industry and Security Directive.
Right. On June 12, they blocked non-U.S. nationals from Anthropic's new Mythos 5 and Fable 5 models.
Yeah, and that was just 3 days post-launch. We really need to emphasize this point. This marks the very first time U.S. export controls have directly targeted an AI model itself.
Wait, really? Distinct from just the hardware?
Entirely distinct from the semiconductor hardware, yeah.
Yeah, let's unpack that. If the U.S. is fencing off its frontier software models, why does that suddenly make Korean hardware a comparatively safer bet for global allocators?
Well, it comes down to the investable universe. If the U.S. restricts global access to top-tier software, the investable AI landscape for non-U.S. markets shrinks dramatically.
Ah, I see.
So your only unrestricted, pure-play AI exposure left is the physical hardware supply chain powering those models, which sits squarely in Korea.
That makes a lot of sense. So pivoting to macro alternatives here, if the U.S. software fences up and Japan is bleeding cash to foreign platforms, what about China?
Well, China's macro data is showing some pretty severe fiscal strain right now.
Right. Their government debt crossed 100.6 trillion yuan at the end of May 2026.
Which is approximately 13.9 trillion USD.
And that figure has literally doubled since 2020. So does this massive fiscal risk automatically push emerging market managers straight toward Korea?
I'd confirm that trend, yes, but you have to remember Korea has its own internal hurdles to clear.
You mean the delayed dual listing regulation?
Exactly. Because those regulatory guidelines are still delayed, we've got several trillion won in IPO capital basically frozen.
Right, like HD Hyundai Robotics. They secured 180 billion won in pre-IPO investment, right?
Yeah, so roughly 129 million USD, and right now they are left entirely in suspension.
Wow. Okay, so pulling all these signals together, we've got the hardware returns, the U.S. software restrictions, and these regional debt factors. What is the actual bottom line for the portfolio here?
Japan's structural AI ecosystem gap, highlighted by Jensen Huang skipping Japan to co-announce a June 8 AI factory with SK Group, strengthens Korea's relative positioning against Japan and China. The Anthropic model-level export control introduces a new systematic AI equity risk premium, shrinking the investable frontier AI universe for non-U.S. markets and making Korean hardware suppliers a comparatively safer pure play. Combined with China's fiscal constraints, Korea's cleaner sovereign balance sheet and pending IPO catalyst support overweighting #KOSPI in an Asia ex-Japan allocation.
If U.S. model-level export controls become the new normal, will global allocators be forced to split their portfolios into entirely distinct AI hardware and AI software geographic silos? That's today's AI Prism, Global Investors. This episode was produced with AI assistance based on Seoul Economic Daily reporting and reviewed by a human editor. AI Prism is a 1 IFRA award-winning series. We'll be back tomorrow.
You've been listening to AI Prism from Seoul Economic Daily.